Friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to the weekly market analysis show, where we look at what exactly happened in the markets during the last week and how we can look forward to plan our trade for the next week. So this is analysis for November 22nd, Monday 2021. So if you're not subscribed, please subscribe and share with your friends and colleagues so that everyone benefits. Thank you so much. So let's get back into the price action and the patterns. We have the charts ahead. We'll flip between these two and what happened. This is the weekly candle that you see. It's a bearish wide range on the Nifty 50 and the Banknifty also got a bearish wide range. So bearishness all around, right? That's what happened. The wide range that can be 2% down. Banknifty was 2% down, and it was all red days. Look at this. It's a daily candle. You can see 1, 2, 3, 4. It's a short week, 4 days trading. You can see it was trending down all days downside. So there's an inverse hammer and it didn't work out for a reversal. And there is inverse on Nifty, which didn't work out in the third day and then further went down. So it is clear bearishness that is evident. 4 days continuous red on Nifty and the Banknifty, and it is on the edge of a trend line. You can see that Nifty is on the edge of a trend line, which is starting from the COVID 2020, and this Banknifty also kind of an edge and a support zone, right? So Banknifty daily candle, if you see, it's bearish red, right? Nifty also daily candle, if you see, it's bearish red. So yeah, so Banknifty has so if you look at the Bollinger Bands, you can see that it has slipped off from the Nifty on the left side, slipped off from the moving average support and is in the lower band. It does not start spilling out, but look at Banknifty. It has fallen down heavily from the 20 moving average of the median band of the Bollinger, and also the Bollinger volatility is expanded on the side, on the downside, which is bearishness, and started walking on the band downside. So this clear bearishness on the Nifty and a clear sideways movement confirmed on the Nifty. That is what the Bollinger Bands is talking about, right? So volatility contraction has happened on the Nifty, volatility expansion on the bearish side has happened on the Bank Nifty. That's what Bollinger Bands. Support resistance, you can see that it is 17,800 to 1850, the first resistance on the upside. After that, we had the 18,000 upside and then 18,100. 3 levels upside. Support 7,600, 7,650, really close by support. And then after that, if that is gone, then 7,350 to 7,450 levels. Below that, we have 7,250 to 300 levels, right? So the Bank Nifty has got a resistance of 38,000 levels and then after that 38,500 levels, and then above that we have 39,000. These are the previous support zones, which is now acting as resistance. And downside we have 37,700 to 37,800. And then the 37,800 range, and then 37,300 range, and then you have downside 37,000 level below it. Look at this. This is what you're talking about in Nifty, right? So it is exactly on the trend line channel. It is not fallen down to the support, which is the close by 650. That slips, it goes down like this on the upside. Where it has fallen off, so it's a Fibonacci retracement level also is below. You see that. So it's an 18,000 upside resistance first, and then 18,100, 18,200, 18,400, then all time high. Now similarly, we decided support zone exactly 37,800. If that goes, you have 37,400. Then that goes to 37. Then you have the Fibonacci 51%. So upside, you can see that it is resistance where it fall off from 39,000, and then above that 39,500, 40,000, and 41,000, and 41,800 upside. So it's a big fall that is happening in Bank Nifty. And yes, this is support resistance result. So you have Fibonacci 23 of support that is immediately cross here, and you have Fibonacci 38,000 at 37,400 for the Bank Nifty. That's a good 2 supports on the charts, and then resistance major is at 39,000, which is Fibonacci 23, and resistance is on the upside. It is going to be 18,000, which is a rounding pattern also, right? So let's analyze the momentum in the trend analysis first. So momentum is it is anyway lost. It has gone to the sideways on the Nifty, but Bank Nifty has gone to the bearish zones, right? Look at this. It has gone to the bearish zones downside, right? So that's it. From the Bank Nifty, the higher time frames, daily and weekly, is fine for Nifty. Weekly is fine for Nifty, but Bank Nifty it has gone sideways, right? Bank Nifty weekly has gone sideways and daily has gone to bearish zone. So it's more bearish from the momentum perspective. Nifty both sideways. Nifty is not at sideways. Nifty is still bullish, and there is also a bullish This is the weekly chart of Nifty. You can see that there is a divergence that is there. One divergence is walked halfway and moved at claim and failed. Now another divergence with the moment is coming down and the price is going up. So this is another divergence which can push it back to the 18,100 level. So that is a possibility that the Nifty can bounce back. Right? But look at Banknifty weekly. No hope. It has gone and slipped on the sideways. Now just to bounce back and climb back before we can say, right? So it's momentum wise, divergence wise, or Banknifty is very weak. Trend wise, if you see that, you can see that it has already lost trend, right? In the short term daily candles, if you see, it is in the bear zones, and you can see that the strength of the trend decrease has increased. It's slowly rising up, and is also rising. The Bank Nifty also, the trend is bearish on the short, it is rising up. Now another thing is that in weekly, Bank Nifty and Nifty both are still in the bullish zones in weekly candles as far as the ADX trend indicator is seen, but the strength of the trend, the green one, the ADX part of the ADX DMI, this direction indicator, if you see, that has taken a bend on the weekly. So medium term, also both the indices are showing further weakness. Apart from the short term, which is already in the real zones. Open this later. Before that, let's look at the VIX. This is the VIX chart that you're seeing. See, 4% of dip, more than 4% of dip as happened last week. And it has breached almost the 15 kind of levels on the edge of that 14.85 kind of levels. Right? IV also has dipped to 30.5, which is above the 11.6 HIV, but IVP has dipped from 40 levels to 22 levels. So pretty much decreased, and the high volatility range is breaking or not, we have doubt. There is a chance that it can roll back upwards now from here spike. That means market is going down. Right? That's also possible. That's ideally possible if the range of the 14 to 19 or 20 is to be maintained. So we'll have to see that in the next. Now look at the open interest analysis data. So futures data is showing short build up on both open interest, futures open interest data. Put call ratio is showing that it is not very bearish but not bullish either. Right? 0.64 is there, 6.2 is there for Nifty and Bank Nifty. Put call ratio. Now Nifty, the major support as per the charts. So there is no trading that has happened for this last week. Basically, this weekly expiry. There is a short holiday. There is a holiday on Friday, and there's a Monday is the first day. So it's not that labeled data, but still, as of now, the November monthly expiry is going to have 25th November monthly expiry is going to have 17,500 as the highest support as well. That breaches in here 17,400, which is happening. Now the highest resistance is 18,000 and 18,500. So it may be between 7,500 and 18,000. Looking at the bearishness that the expiry may want to happen. No, depending on the price action on the next 2 days. So 38,000 and 37,000 is where the highest open interest. Put writing is in, and upside 41,000 and 38,000. Call writing is also in highest. And that's what the open interest data, for the Nifty and the Bank. So this is what we are talking about, right? Overall you can see that it's a bearish chart with the call writing dominating Bank Nifty and right side of the Bank Nifty also. Now, if you look at the sectoral performance, IT sector fall down 1%, right? Short-term momentum is still sideways. We'll have to wait. FMCG, small body candle above the 20-day EMA. Daily and weekly momentum is sideways. We'll have to wait for that to catch up. Metal 5.5% down, bearish candle. That's a big fall in the matter. Losing momentum in weekly and daily both. We'll have to wait. Auto sector was more or less flat, right, last week, and there is a gravestone doji. That is a bad thing. We just show that further bearishness can come, so you have to be very cautious, even though the momentum is on the edge on the short term and the momentum is bullish on the weekly. So there is bullishness still evident in the auto sector, but the doji daily gravestone doji is an indecisive bearish kind of candle, which can cause at least some amount of bearishness in the coming days. So you have to be cautious on that. You can be cautiously, we can attempt the momentum catch-ups to follow the auto sector only. Pharma again down more than 2%, bearish candle. Momentum in the short term and medium term lost. Better wait. Reality sector just trending upwards with the cup and handle pattern. It seems to be 3% down last week, and momentum was in the sideways, and you just have to wait for the short term momentum to catch up, even though weekly may be good, right? So that's the sectoral watch as of now. Auto is only sector which is having some indication of bullishness, and metal has fallen the largest for 5.5%. So even the reality was going to good is now showing bearish signs, right? That's sectoral watch for the next week. Institutional participation is that Fyers, unfortunately, 4,400 crores of selling again happened after 25,000 plus crore of selling in October, November also is turning out to be big selling for the FI side. Now, domestic institutions bought contrary, around 4,000 crores of buying has happened, and derivative long positions have gone more or less flat on the domestic institutions and the foreign institutions last week. Now, global markets, if you see USD INR, you can see this is the weekly candle for the USD INR currency pair. Currency pair is taking support early, taking support after facing resistance to the upside, and then it seems to be not ready to go above the 75 levels, and then it has settled down at the 74 kind of levels, right? Mountain was also dipped, so it's consolidating and maintaining the channel trend line. But interestingly, the dollar index, which is mostly reflective of the European dollar values, and but that is the one that we can look at as of now. That we have some impact from the currency pair also, but that is breaking out. It has taken out the major resistance and heading towards 99, which is the next level. So if that is happening, then our currency also will have some impact and then weaken out, right? So oil has cooled off last week. That is a good thing, and right. So dollar. So basically, currency. Right. So there is some lack of updation on these points that is written there, but in a nutshell, you can see that the US dollar index is breaking out. Currency pair USD INR is consolidating, and oil has cooled off to below 80 levels, which is good for the economy. And gold has taken a resistance last week after trying to break out from the channel, as you see here. So this is oil cooling off, and there is a breakout that has happened, and then taken a resistance, and so it is a resistance week. So the momentum also has tightened, but overall gold is bullish. Now, two actionables is all on the bearish side. On the short side, Axis Bank is the inverted head and shoulder pattern, which attempted to break out from the 2019, and two attempts in 2020 didn't happen, and then just failed, and then just falling down like anything. So there is an opportunity of a swing trade up till this previous swing low levels, or maybe further down also. Right? As long as the momentum is going below the 40 levels, you can take extend the targets. Right? Another one is auto, Bajaj Auto, and weekly chart is what you see. It is facing resistance. It attempted and it's forming some kind of pattern breakdown, and this is the previous swing low. And if that is coming at 34.65 is the problem, it can come down, and then bearishness is seen in the weekly. Also, the momentum is lost, not really daily. So weekly and daily, the momentum is lost. So it's more bearish. And there is some negative fundamental news also that's taking out of the index and things like that. So charts also support that. So there is variations around these two stocks. This can give some good profits in the downside. So this is the actionable. So this is an iron condor with range between 17,500 and 17 and 18,000. So these are the two resistances that is seen in the OI charts as well as in the charts of the good support and resistance. So that range we get it. So as long as it stays in that, we have a low risk strategy. Number of lots can be increased as per your appetite and risk appetite. Basically, these are reasonable goods and good risk reward. So the volatility is consolidating and not shooting up. If it is shooting up, then you just have to exit and not adjust. Otherwise, you can slightly adjust, assuming that the fall will not happen below 70,500 and the up move will not break the 18,000 again, right? At least in another few days, from Monday to another 4 days, right? So that may be a good trade on the index on the option strategy side and condor. Now to wrap up, Nifty was trend sideways. Negating the earlier week's recovery. So previous week, it had 4 days of recovery. V-shaped up move happened, and that is negated, and it has now fallen back there where it was. So Banknifty is even more weak. So in the short term, charts are showing that Banknifty is even more weak. So the bias is moderate bearishness because momentum is lost, charts are negative, trend is negative, institutional is selling, and Banknifty is heavily bearish. Not at all supported for Nifty. So another thing is the index is it's at the lower level of the base of the range that is formed, and there is a spike that can be possible, which also indicates that the market can fall down when the index is going up. Anyway, current respects always helps. If there is IV spike, and flies also at this range can still help at this range of volatility. Now I use negative spreads and we use vertical. So this is a repetition of my everyday stock. And Bollinger Bands is clearly showing this consolidation, and banking index is clearly showing there is a bearishness that can go further down in the short term. So consolidation is for sure as per the Bollinger Bands, right? And then along, if you read that chart pattern, along with the global cues of dollar strengthening up, tapering to come in December, the Fyers further pulling out the money, further corrections, only we have fallen only 5%. So another 5% corrections cannot be ruled out, which may extend to 17,000 kind of level. So you have to anticipate that, right? So stay alert as long as you're taking long positions, and this is definitely not a time for go long or buy the dip. Right? This is not the time for that. At least on the index trades, and right, good stocks, quality stocks which are performing, which are corrected decent, that can be looked at, but not for trading intraday or trading pressure on the indexes and as such, right? So that's a wrap up that I have. There is some bearishness that is there by my view, that it may differ from your view, but definitely can be input from your view and your trade plan. And hope you like it, and share and subscribe. We have very few subscriptions that is happening, so which is kind of disappointing at times. Considering the effort that is put in this video. So hope you would help out on this regard. Thank you so much for watching. Happy trading and happy learning. Bye.